So yo, what's up guys? So many of you asked me to make this video about market correlations, and I said, we're chatting about it on the group actually, and I said I'd rather make a video because I'm going to keep on preaching and there's going to be a lot of unwanted messages on the Telegram group. But anyways, let's just start off. So I just made some bullet points and some examples, and then later we'll backtest it all together. So your analysis is closer to objectivity opposed to subjectivity. What does that mean? That means basically by knowing your market correlations, your opinion about the charts becomes more valid and you have more reason. It becomes more logical because anyone can say this will continue buying, that will sell, this will do that, this will do that. But if you have the trading data and the information that backs it up, you're closer to objectivity. Your trading is more factual. The next point that market correlations helps with is gauging momentum. So this means like understanding what's buying, what's the trend, how much momentum is picking up, where is it going to, and knowing your market correlations, this can help you because you can look at multiple charts for this, and you can see if something is buying to an historical resistance or selling to a historical support, that it still has to reach that level. So you understand how the momentum is and how it's picking up speed as it's going. The one thing I like to follow when I'm looking at gauging momentum is, okay, when it's selling, how slow does it sell? When it's buying, how fast does it buy, and vice versa, because those type of things help you understand where the direction is going, other than just looking at the support and resistance. Pair selection. So this is also a big one. So with knowing your market correlations on the day, you'll have information on what is the best pair to trade. And what I mean by the best pair to trade is if you get into that trade, the opposing pair that you're trading against has less resistance, meaning you won't have a lot of ranges and unsure about the market direction. It will just follow in your direction because there will be less resistance on the pair you're trading against. So it's also important to understand your market correlations for your pair selection. More information about charts and trends, and you can understand this by knowing your market correlations. Now the next point is very important: knowing your sentiments. Now what this means is your sentiments, you get your risk off sentiment, and that falls with your commodity currencies. So your commodity currencies are currencies that depend on hawkish economies and bullish economic growth. We're just going to keep it simple as that, okay? And that's your risk off. So risk off, CAD, NZD, odd indices. This means that there is no bearish market sentiment, meaning that people are optimistic about current structure, current economic growth, meaning that there's a lot of growth encouraged. And risk on is exactly the opposite of that, meaning that there's some pessimistic view towards the economy or the world's economy and the growth of it. So you just got to keep that idea locked in your head. So knowing your sentiments will help you determine direction. So I'm going to give you a quick example. When COVID cases first broke out in the US and other countries went into lockdown, right? If you were trading at the time, you would have seen the dollar was very bullish, meaning that it was moving other currencies, okay? And this was because there was a pessimistic view of the economy and the world's economy. So now, after a few months, things began to cool down, and everything was following, its growth again. So you would have seen your indices break all-time highs, your NZD, ARD, and CAD recover against major losses that it did make during that pessimistic time. And also knowing your sentiments in general can help you determine, direction. So if you're in a risk-off sentiment, you don't want to be trading. Well, you can, because price always bounces off support and resistance, but you don't want to be, let's say holding a sell through a support or something like that. You don't want to be caught on the wrong sentiment. And the next point is knowing your negative market correlations. So, like knowing your sentiments, if your indices are falling, how does it affect the dollar? So now I'm going to show you some of the market correlations. So XAU slash USD, which is gold. So what does this mean? If gold is buying, 80% of the time you'll see AU is buying. So if gold is buying and gold is in an uptrend, what you could do is this gives more validation to your buy setups on AU, as well as if gold is buying, most of the time, your XPS 500 is also pushing up, so you'd have more understanding about that. And also, if gold is in an uptrend, you could also, if you have a sell setup on USD Chef, it gives it more validation. It'll follow in that direction more. DXY dollar index, most of you guys know this one. So the DXY has a positive correlation with USD and JPY. So this means when the dollar index is buying, USD and JPY are bullish on those days against other currencies, and it has a negative correlation with indices. So NAS, your XPS 500, and so on. This is one of my favorites to use. XPS 500, it has a positive correlation with commodity currencies, so that's your risk-off currencies, right? And a negative correlation with your risk-off countries, your risk-off currencies. So that's your safe haven currencies. So when the market is in pessimistic like outlook, so that's Chef, USD, and JPY. So if XFX 500 is buying, like it was for most of the past 2 weeks, you would see Chef, USD, and JPY bearish on those days, and we're gonna look into it and understand what XPS 500 is doing. Gives you a sentiment. So having a sentiment, you don't want to trade against the sentiment, because most likely your setup won't work. It's a probability game, and if you know your sentiment, your probability is higher, which takes you closer to objectiveness opposed to having an opinion. And then you get US oil and CAD. So if US oil is buying, CAD is also most likely bullish. So everything I've said here, we're gonna look into it now. But I just want you, even if you have to, just rewatch the video, get an idea of it again, and maybe just rewatch it, understand what I'm saying, and you'll always get more time to practice. But let's get onto the charts. Okay, so we're gonna look at two examples. Okay, so what we'll start here, we'll just look at daily charts and how it affects it. So here, this is a market structure break, so we'll look at it from here. So the 16th of June 2021. So if gold is selling, right, that means that odd USD on the 16th of June and USD Chef on the 16th of June, USD Chef will be buying and odd USD will be selling. Let's check it out. Alright, this is the 16th of June, and you get the similar type of like movement, right? On the 16th of June, market structure broke, right? It broke this range here, right? Because gold and odd have an 80% correlation. Now let's check it on USD Chef. You see, it also a similar structure here. It broke market structure, made new monthly highs with this movement here. I'm not going to show you like going. We're not going to do like 10 sets. We're going to just do one because, we don't have time for that. But you are encouraged to check this out by yourself. And, you could always message me on the group and I would always respond. So we've seen the correlation it has with gold, and we've seen the correlation it has with Chef and Odd, and the correlation it has with USD. Okay, so let's look at something else. So the dollar index. Dollar index. This one will be interesting because I've never heard anyone that speaks about using DXY to understand what NAS is doing, and I think it's a big thing that people need to start looking into, But anyways, let's look at it. So as you know, we'll use a different date because we don't want to you just make it obvious. So let's look for a nice movement. Let's look for this here. So we'll focus on the 28th of September and the 29th because market structure broke and made new highs. So yeah, we're starting with JPY, so the 29th and 28th of September. So what we see here on the 28th of September, a lot of bearish, momentum picking up here, and you could have caught this all, and using DXY when it starts to slow down at this area here, you could have looked to get out of it, because gaining momentum slows down. So let's just look at the same thing on the dollar, 28th and 29th of September. Yeah, you see, you get these movements here, these big cells breaking structure and things. But I mean, most of you guys already know the correlation that DXY has with the dollar and JPY. But the interesting thing is NAS. So let's go look at NAS. What did we say? 29th and 28th. Okay, yeah. So like I said, negative correlation. So if DXY is buying, NAS will be selling. So on the 28th of September, do you see how the sell came in here, breaking structure? The 29th, again, more bearish movement. You could have caught it up there, whatever. And I just hope you're looking at this like, I don't trade NAS, I don't trade indices at all. I only use it for Confluence. And when I do use it for Confluence, I'm using XPX 500 only. But this can help a lot of NAS traders. I'm sure of it. Yeah, so let's look at something else. Yeah, XPX 500, positive correlation with commodity currencies and negative correlation with safe haven currencies. So this is my favorite one. So what we're gonna do, we're gonna start by looking at XPX 500. Right? Do you see how this buy started here on the 13th of October and it got more aggressive? It just kept on going, and then it started to slow down at this area. So when it's buying like this, your dollar, JPY, and Chef against your commodity currencies is bearish. So your NZD, CAD, and ODD are bullish. USD, JPY, Chef, bearish. And when it gets to this area here, an overbought area, resistance starts to rage, it starts to slow down in momentum, you can start seeing a change in the market. So we're going to focus on the 14th of October going in. So commodity currency NZD against the safe haven currency JPY. So 14th of October. Do you see how this movement came in here and it was buying as well as how XPX 500 was buying? Right? This is a big move. This is a big move in a day. And what's the interesting thing is, like, when XPX 500 got to that oversold area, you start seeing this. The sell is coming in. It's like, a hope, like things are just ticking in your brain and things are happening. But this is easy to see, and you see it all over. You'll see it with all of your commodity currencies, all of your safe haven currencies. 14th of October, the buy, and it starts to slow down there, right? 14th of October starts to slow down there. So let's just check USD quickly. 14th of October starts to slow down there. And like, how can we use this going into next week? We can prepare for what's happening next. If we keep on having more momentum downside, we can start taking NZD USD down, just CAD JPY down, and things like that. And what else was I going to show you? What else is there? Oh yes, so once you've done this, once you see that XPX 500 is buying, you know your sentiment. Okay, XPX 500 is buying. Risk off sentiment. I'm gonna want to trade against JPY, USD, and Chef. So what does this mean? Like, your buy setups would be more valid opposed to your sell setups. Like what can I say? If you know that XPX 500 is gauging momentum and it's just carry on rallying, you're not gonna want to sell, NZD USD at this resistance. You're not gonna want to sell a chair. Only when the historical resistance gets tested and you get a range there. That's when you know, okay, I am safe to get into the sales. So I hope this is, it's really changing the way people are thinking, because a lot of people don't know this. So I decided to just, want to share it, want to make a YouTube video about it. Let's look at the last one. US oil and CAD. So US oil has been around historical resistance for a while now. Okay, it's pushing up. Okay. So let's focus on like the 7th of October and onwards. 7th of October. Do you see how while US oil is rallying up, we're getting these cells coming in? So what would this mean? How would you use this? This means that during that time, all of your sell setups on USD CAD are more valid than buy setups, because if you know that US oil is rallying, you're not gonna buy US oil here. You're not gonna respect that support because you know there's nothing there. There's no correlation backing the idea. There's less probability. Anyone can look at that and say, oh no, that's support. But knowing why it won't hold is what separates you from the average Joe. So like you can see here, XPX 500 reached the overbought area. You start seeing a range there. And I guarantee you, if we can get some bearish movement on US oil or XPX 500, this will go upside. Like, I'm sure you've heard saying that always buy NAS, something like that, but no one talks about the fact that how that can affect USD, right? Because if NAS is always buying, and we know that the correlation with USD, it has a negative correlation with USD, that means that most of the time USD is bearish while indices are going up, right? Just in theory. But now what's interesting is when your indices are going down, the dollar often sells fast, JPY often sells fast. So what does this mean? Like, aggressive moves against pairs. And I mean, I'm sure we've all seen it before, like just like big moves, like 100 pip buys in sessions and things like that. So why does XPX 500 affect commodity currencies? Because XPX 500 represents the global economy. So if it's growing, that's good for the economy. That's encouraged for more optimistic investing, etc. It's selling. That is very pessimistic, meaning USD, JPY, and Chef become the safe havens. So I hope this video has helped some of you, and I hope it's actually going to help you guys move forward. And yeah, cheers guys, until next time.